Good morning, hello and welcome to Moneycontrol's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, we are back with a new day and hopefully we can have a better day than yesterday that we saw. Definitely the GIFT Nifty is indicating a positive start for our own markets. So whether the 25,000 mark sustains today is something that we'll watch out for, because we did snap and we broke below that 25,000 mark in yesterday's trading session. The optimism from global markets does trickle in. US markets were quiet overnight but ended on a positive note. It shrugged off yesterday's concerns of Moody's credit rating downgrade, and even Asia Pacific markets also started the day on a positive note. If you look at China cut its benchmark lending rate after a gap of 7 months. So both the 1-year and 5-year loan prime rates now have come down from its previous. Other than that, we have also seen in the Chinese markets that we also saw the largest battery manufacturer, CATL, that debuted shares in Hong Kong markets and 14% uptick. That's what it debuted out, so that's quite impressive that came in. Now the company does plan to use the funds to build their own factory in Hungary and supply batteries to their European clients, which is your Volkswagen, BMW and the likes. So yes, that's an optimism that is coming in from the global markets on a whole, looking positive, can support any gains which could be seen in the Indian markets. But yes, coming back to home, stock specific action is expected to continue. Today we can see some earnings reactions. Bharat Electronics did report a good set of numbers, could react positively to its March quarter performance. Power Grid muted performance, can react to its Q4 results as well. Also, we'll be taking your stock related queries from our live feed, so keep posting them and we'll take them up before 9:30 a.m. Now let's quickly take a look at the top headlines this hour. Stocks in the Wall Street end higher despite Moody's rating downgrade. The Dow Jones advances over 130 points, while the S&P 500 eked slimmed gains but rose for the 6th straight day. Stocks in the Asia Pacific also opened higher. China cuts benchmark lending rates after 7 months. Meanwhile, the GIFT Nifty is indicating a positive start for our own markets. Oil prices rise on signs of faltering US-Iran nuclear talks and weakened prospects of more Iranian oil entering the markets. Gold prices, meanwhile, move up on safe haven demand on Moody's downgrade. Commerce and Industry Minister Piyush Goyal is in the US for key trade talks, says he had good discussions with the US Commerce Secretary Howard Lutnick towards expediting US-India bilateral trade agreement. And US President Donald Trump speaks to Russian President Putin, says ceasefire talks between Moscow and Kyiv will start immediately, as Putin says they are ready to draft a memorandum for future peace agreement. Alright, like I was mentioning that Sensex and Nifty did see a choppy session yesterday, and Nifty failed to hold that 25,000 levels, ending 74 points lower. But the sweet spot for yesterday's markets continued to be the broader end of the markets. Midcap and smallcap indices continue to remain a buy for the traders, and they once again outperformed the headline indices. And today we'll watch out if the rally holds on in today's trading session also. Among some of the sectoral losers and winners yesterday, Nifty Realty and PSU banks, they were the top performers of the day. On the other hand, Nifty IT and FMCG indices were the top laggards of the session. However, defense stocks, which had been on a back-to-back rally last week, that saw profit booking yesterday, with majority of the defense plays falling up to 6% or so. So yes, the defense theme looks like, it's onset, some profit booking was seen, so some fizzle out of the sentiment could be seen in yesterday's trading session. Today, like usual, the Q4 results season will continue. We'll see Hindalco, Aster DM, NHPC, all of them reporting their March quarter performance, so we do watch out for all of these names. Apart from secondary markets, if we shift to the primary markets, we have Borana Weaves IPO, which is opening for subscription today. Now, this is a Gujarat-based textile manufacturer, and in the unlisted markets, the IPO is commanding a decent premium of about 26%. The IPO is priced between 205 to 206 per share, rupees per share. So watch out for this too. Other than that, some of the other cues that will set the tone of the today's trading session. First is your fund flows data. We can see that the FIs have turned net sellers in yesterday's market, where they sold stocks which was worth about 525 crore rupees in the cash markets, and DIIs were also net sellers yesterday. They sold about 237 crore rupees in the cash market. So not a major selling, but still they did sell some of the stocks in yesterday's trading session. The second on your screen is the option cues data. Nifty put call ratio falling to about 0.82 levels from 0.97 levels in the previous session. And coming into the F&O ban list, no new stocks were added, but the stocks that continue to be a part of the F&O ban, that includes the likes of Hindustan Copper, Manappuram Finance and Titagarh Rail. And none of the stocks have been out of the list yet. Now, just a couple of minutes before we go to the open, 10 minutes to go for the open. Let's take a look at how the pre-open rates stack up. Well, both of them are indicating a very quiet start for the market. Sensex is flat in the green and Nifty is also up about 14 odd points, but very flat, but still below that 25,000 mark in the pre-open at this point. But on that note, let's quickly get on board with our technical expert of the show. Joining me is Jatin Gedia, Technical Research Analyst of Mirae Asset Sharekhan. Jatin, good morning. Yesterday Nifty was not able to hold that 25,000 mark. Do we expect consolidation to continue?
Yeah, good morning, everyone. So, as far as the Nifty is concerned, we believe that it's undergoing a minor degree pullback after we saw that sharp run up in the previous week during the expiry day, that is on Thursday. So, post that it has been consolidating since last couple of trading sessions. We believe that this is a brief pause in the overall uptrend. The uptrend is still intact. We believe 24,800, 24,750 is a very crucial and a strong support for the Nifty. We believe that it might continue to consolidate, but overall the trend continues to be on the positive side. This minor degree pullbacks should be considered as a buying opportunity. On the upside, we are expecting 25,300 from a short-term perspective. So this dip should be considered as a buying opportunity in the case of Nifty.
Okay. Anything that you want to outline from the bank Nifty levels as well? Because yesterday that also was very quiet in yesterday's trading session, Jatin.
Yeah, see, in the case of Bank Nifty has been under a consolidation post hitting that all-time high of 56,100. So it has been around 17 to 18 odd trading sessions wherein the Bank Nifty is consolidating around that all-time high. So I believe that a decent amount of time-wise consolidation has already happened. In yesterday's trading session, we also saw the PSU Bank Nifty outperforming among the sectoral indices. So now the Bank Nifty and the banking stocks in particular are likely to catch up or lead the next leg of the up move. So we are pretty positive on the Bank Nifty as well as the PSU Bank Index. We believe that a decent amount of consolidation has already happened. In terms of levels, 56,100 is the immediate resistance, and thereafter we are expecting 57,200. On the downside, the support is placed at 55,000 and 54,800. So the risk reward is favorable for going longs, and we believe that Bank Nifty, which was consolidating since last couple of weeks, since last 17 to 18 odd trading sessions, is now likely to lead the next leg of the up move.
Okay, all right. Bank Nifty 56,100 levels that we need to watch out for. But Jatin, the sweet spot continues to be from the broader end of the markets. What do you expect? Do you expect the trend to continue, especially from the small caps?
Yeah, see, both the mid cap and the small cap index have, relatively outperformed the benchmark indices. I believe that there are pockets of strength, be it specialty chemical, be it the hotel space. Some of the stocks are buzzing. So it's a selective pack. It might not be from the sectoral indices, but these are some of the themes that are playing out. So that is keeping the mid cap and the small cap space, in the limelight. And overall, I think since the Nifty and Bank Nifty have been consolidating. The action has picked up in the broader market, that is the mid and small cap space. So we believe that there could be sectoral rotation, which could lead to some kind of broader market performance outperformance as compared to the Nifty and Bank Nifty. So till the Nifty and Bank Nifty continue to hold their crucial levels, we believe that the mid caps and small caps, could continue to continue with their up move in the immediate term. So yes, we expect the rally to continue in the broader market.
Okay, okay. You expect the rally to continue. Okay, let's also talk about Nifty Defense Index because that was the top performer last week, and yesterday we did see some profit booking on the counter. Of course, HL numbers were taken a little bit of setback by the markets given their FY27 guidance was lower than what the street was expecting. But Nifty Defense Index, what is your view on the counter, Jatin?
See, Nifty Defense Index after a sharp run up since past 5 to 7 trading sessions yesterday, it witnessed some profit booking. So we believe that this profit booking could be a minor degree pullback. I don't see the trend reversing as of now immediately. Some of the key constituents of the defense index, that is HAL and BEL, are looking positive still. Yes, there has been a sharp run up in the recent, or we can say the last week, but there are no signs of trend reversal as of now. So there could be some amount of profit booking, but that could be only a minor pullback, or we can say some kind of a consolidation. But overall, the trend is still positive. So we look out for some stock specifics where the setups are good to go longs, but overall there is no need to worry as of now in the case of defense stocks.
Okay, okay, all right. Let's also talk about graphite stocks because those were buzzing in yesterday's trading session on the back of Japanese companies shutting down electrode plants. But how do they look like on the charts, Jatin? Be the likes of HEG or even Graphite India. Both of them stock, saw up to a 14% jump in yesterday's trading session.
Yeah, see, I think the up move has been on the back of the news flow that we got from the international market. So, yeah, I believe that the price action is positive, and the stocks stayed within the upper end of the trading range that it saw in the last trading session. So I think there could be some amount of consolidation, but the price action has been pretty strong. So if I look at the charts of Graphite India, I believe that there is a scope for up move towards 600 odd levels in the coming trading session. So any dips, because considering that it was pretty much strong up move in yesterday's trading session, there could be some consolidation, but overall the trend remains positive, and we could expect 600 to even 625 in the case of graphite in the short term. So stay on the long side. Minor degree pullbacks to 550 should be considered as a buying option.
Okay, okay. Also about Nifty Realty Index because after May 9, the stock, the index has seen a good breakout given that it had undergone a period of consolidation as well. But anything that you're liking from this space also, Jatin, and especially from the Nifty Realty Index?
Yeah, so Nifty Realty, I think Godrej Properties, Oberoi Realty, both of them are looking positive from the FNO pack. Shobha is looking positive from the cash segment. So yes, there are pockets of strength in the realty space. Our preferred pick will be Oberoi Realty because it has formed a very strong base, and thereafter it's witnessing up move. So in the case of Oberoi Realty, I'm expecting levels of around 1850 from a short-term perspective. So Oberoi Realty is a preferred pick. Apart from that, Godrej Properties is also looking positive. So yes, overall Nifty Realty Index and some stock-specific moves we are expecting on the long side. So outlook for realty is positive.
Okay, outlook for realty is positive. That is the view coming in from Jatin. But yes, first rates coming on your screen. We have opened above that 25,000 mark that we were hoping for. 0.2% uptick on the Nifty 50, but a very quiet start for both the headline indices at this point of time. Sensex is up about 172 points, 0.2% uptick coming in for Sensex as well. If you look at the advance decline ratio in the early trade, we can see the advances are seeing a bit of an upper hand at this point of time, but we'll wait till the rates settle in. If you look at some of the sectoral indices, and definitely the India VIX after yesterday's 4% jump, it has seen a little bit of a cool off with about 1.5% cut. For the India VIX. If you look at the broader end of the markets, which have continued to remain the cushion for any downside of the markets, if you look at small cap and mid cap indices, again advancing well ahead in the trade. Small caps with about 0.4% gain, mid caps with about 0.3% gain coming in. So yes, broader markets that continue to remain the sweet spot and definitely exhibiting the resilience to another day. Now let's take a look at some of the sectoral gainers and losers. Nifty Auto Index not doing well, seeing flat in the red at this point of time, and Nifty Media Index is also seeing a little bit of a cool off from yesterday. Nifty IT Index, which was one of the top sectoral laggards, is seeing a bit of a pickup, 0.5% gains coming in for the Nifty IT Index, and Nifty Metal Index with about 0.7% gains coming in. So yes, Nifty Metal Index is the top performers at this point of time, given that we did see China cutting its benchmark lending rate, 1 year benchmark lending rate to about 3% from 3.1%. So yes, we can see some sentimental reaction which is playing out in the metal stocks. Other than that, we can see Bank Nifty also doing well, 0.2% gains coming in for the Bank Nifty. Nifty Pharma Index, Nifty Realty Index, as we were talking about, Nifty Realty Index also building on to the gains. Let's take a look at some of the top gainers on the Nifty 50. That includes the likes of Hindalco, 1.2% gains coming in for Hindalco ahead of its Q4 results. The company will be reporting its March quarter performance today, so watch out for this. Coal India, Tata Steel, all of them doing well with about 1% gains. Given that I did mention about the Nifty Metal Index doing well after China cutting its lending rates to push the economic growth, so that is why you're seeing some metal counters also playing well. Other than that, Infosys also with about 1% gains, Sun Pharma doing well with about 0.8% gains. On the other hand, on the losing front, Bajaj Auto seeing a bit of a cool off. Yesterday we saw a 4% jump for Bajaj Auto. Today it's seeing a little bit of a setback with about 0.9% cut. Power Grid with about 1.1% cut given its muted Q4 performance. Shriram Finance also not doing well with about a percent cut. Maruti Suzuki, HDFC Bank also some of the top Nifty 50 losers at this point of time. But yes, Power Grid, one of the top Nifty losers. We did say that the company report its net profit modestly rising by about 5.1%. On the other hand, revenue that fell about 0.6%. On the operational front, we saw that the EBITDA rose about 0.9%, very muted performance, and margins however was stellar because that expanded by about 130 basis points on a year-on-year basis. Jatin, if you look at the stock today, it's not performing well to its Q4 results, but the stock is up about 21% from its March lows. What do you expect the chart indicates?
You're talking about Power Grid, right?
Yes.
Yeah, see, in the case of Power Grid, there has been some amount of underperformance in the stock. It has not been able to surpass its previous swing high, which was around 309 to 310 odd levels. So, yeah, that should continue to act as a resistance from an immediate short term. It could slip down towards the level of 291 to 288 in the short term. So, we believe that there could be some amount of weakness. However, until if it crosses 305 on the upside, the trend could reverse. So if someone wants to go short, then 304 is the stop loss level, and on the downside, he can expect 291 to 288 from a short term perspective.
Okay, all right. Let's take some of the viewer queries which is popping on our screen. Well, the first query coming in from Naveen is asking the view on Shriram Finance. Shriram Finance, what is your view on the counter, Jatin? Because the stock has been oscillating in the range of like 650 to 700 mark. Do you expect a further breakout from here on?
See, I believe that the consolidation could continue or extend a bit for Shriram Finance. There is no immediate setup with which shows that there could be a breakout above this level of 700 to 705 in the immediate short term. So I believe that there could be more sideways consolidation within the range of 640 to even 630 on the downside. So I'm still expecting the consolidation to continue. Breakout is still some time away.
Okay, breakout is still some time away. Let's take another viewer query. Kishore is asking the views on Tata Technologies. If you look at Tata Technologies 1 month charts, the stock is doing well with about 11% uptick. And if you look at from 9th May onwards, the stock has picked up pace with about 16% gains as well. Any targets you want to highlight here for Tata Technologies, Jatin?
Yeah, see, in the case of Tata Technologies, there was a multiple resistance zone at 725 to 730. Now this zone was decisively breached on the upside, and we believe that the trend in the Tata Technologies stock has reversed because it has started to form higher tops and higher bottoms on the daily chart. So we believe that there could be a move towards 800 to 805. However, there is a possibility that it might just come down towards 730 to just retest the breakout that has happened on the 16th of May last week. So overall the trend is positive. However, there could be retest of the breakout which can lead to a dip towards 730 odd levels, but I think that dip should be used as a buying opportunity. Overall, we are expecting 800 to 805 in the short term.
Okay, all right. Let's move on to another viewer query. Kishore is asking on the view on Avalon Technologies. How does the stock look like from February, from January lows? The stock has picked up pace. From 600 odd levels, it has come to around 860 odd levels, and the Q4 performance were also quite optimistic. Jatin, what do you expect the next could be?
Yeah, see, in the case of Avalon, I'm expecting a consolidation between 900 and 780 on the downside. So more or less since last 1 month, probably it has been trading in this range only. So until and unless we get a decisive break about 900, 910 odd levels, I believe that the consolidation is likely to continue. So if someone wants to start accumulating or consider accumulating, then around 820 is the support level. So around that area we can consider to chip in, but at this point of time 900 on the 910 900 is the zone around which we have the resistance. So until and unless that is decisively breached, I am expecting the consolidation to continue.
Okay, consolidation to continue for the counter. Let's move on to another viewer query. Satya is asking the view on Indigo for booking profits. He's asking what is the exit and re-entry levels to outline. We did see that the stock saw a setback, Jatin, because of the cross-border tensions, but ever since that, it has picked up pace, 8% uptick from there on as well. But what is your view on the counter, because the company is scheduled to report its Q4 results tomorrow as well?
Yeah, see, in the case of Indigo, the ideal strategy to trade this kind of a stock is to trail your stop losses to support levels and continue to ride the up move. So, despite all the uh, tensions that have been going on, and the stock, witnessing gap downs and thereafter witnessing some amount of profit booking, but overall, once this does settle down, the stock, generally hits an all-time high. So, there is no real immediate hurry to book profits. The ideal strategy is to trail your stop loss. As of now, the immediate support level is coming at 5400 odd levels. So continue to hold longs. In the case of Indigo, I think 5400 should be your trailing stop loss. Until and unless 5400 is not breached, continue to stay long. On the upside, I'm expecting 6000 from a short term perspective.
Okay, 6,000 from a short-term perspective. Let's take one stock in focus, which is your Bharat Electronics. The stock is not reacting well, but given that the stock has seen back-to-back rally, the company did report its March quarter performance, and we saw that the net profit surged about 18% year-on-year, and revenue rose about 7% year-on-year. Jatin, given the kind of run-up it has seen past couple of session, anything that you would want to highlight from a target level? Because I know that you're bullish on the defense theme and especially on BEL as well.
Yeah, so overall, I am pretty positive because the weekly structure shows that it has broken out from a bullish flag pattern, one year of consolidation, and the overall setup is also still positive. I think the reaction to the numbers has been muted, majorly because it was expected to be a good quarter, and I think the price action did to some extent, discount that earnings beforehand. So that is the reason why we are seeing muted price action. But overall, that doesn't change the overall trend as of now. Yes, there could be some days of consolidation, but I believe that the trend is well and truly intact. I am expecting 390 to even 420 from a short to medium term perspective. So there could be some minor degree pullbacks or correction phases or consolidation phases, but overall we still continue to remain positive on BEL in particular. So continue to hold on in terms of levels. 345 to 350 is a very strong support for BEL, and on the upside, 390 to 420 is the target area.
Okay, 390 to 420 is the target for BL that we can watch out for. Let's take another viewer query at this point. Satvika Ranganathan is asking the view for IRCTC for the long term. How does the counter look like? I mean, it's back to its 800 odd levels, but can it reclaim its December highs of 855?
Yeah, see, IRCTC has now witnessed a trend reversal on the weekly charts. It has started to form higher tops and higher bottoms. But I think this stock has been an underperformer. I think there are multiple resistances on the way up at 830 to even 860. So I think the up move would be slow and steady. In the case of IRCTC, there are multiple resistances that it needs to surpass. So yes, the trend has reversed, but I think the up move is likely to be very gradual in the case of IRCTC. So hold on in the case of IRCTC with a trailing stop loss at 765. So until 765 is not reached, we can expect levels of around 850 from a short term perspective. So stay long with 765 as a stop loss.
Okay, 765 is a stop loss for IRCTC. Let's take another, another stock in focus, that is your DLF. We also have a viewer query by Komal. She's asking the views on DLF. What could be the target and the stop loss for the counter? We did see the stock is reacting well. March quarter performance was quite positive. We saw that the net profit has jumped about 36%, and revenue has also jumped by about 46%. EBITDA has also grown by 29%, and margins, however, have contracted sharply by about 400 basis points. The stock is up by about 21% from April lows, and the brokerages are fairly optimistic on the counter. For instance, your Morgan Stanley has maintained an overweight rating on the counter, and with a target price of about 9110 rupees per share. They believe that the Q4 pre-sales were beat on expectations, and the collections have grown about 36% year on year, which is quite a positive movement for the counter. Jatin, what is your view on the counter? Because the stock has been doing well in today's trading session, but any targets and stop loss that you want to highlight for the counter?
See, in the case of DLF, the immediate hurdle or the target area is placed around 791 to 795. So that could be an immediate target area. On the downside, the crucial support is placed at 725. So the risk reward is favorable for going longs even at current levels, though the stock is around 2.5% as of now. But overall, we believe that there could be a rally towards 791 to even 795 from a short term perspective.
Okay, all right. Let's take another viewer query at this point. Siddharth is asking for Kalpataru projects. His average price is about 982 rupees, and he's asking what should be the stop loss and targets for the following. Kalpataru projects, if you look at the stock at this point of time, the stock is, down 1% downtick. But if you look at from the 1 month perspective, the stock is up about 9% or so. Anything that you want to highlight here, Jatin? His average holding price is about 982 rupees, so he's seeing a bit of a profit at this point of time.
Yeah, I think the stock is poised for a rally towards 1170 to 1200 odd levels. So I think he should continue to hold this stock with a trailing stop loss at 1060 from a short term perspective. So overall trend is positive. We can expect a rally towards 1170 to 1200.
Okay, 117026. All right, let's take another viewer query. That is your Anune Iriki is asking the view on Garden Reach. He is asking that he's bought it at 20 to 50 rupees per share, and he's asking whether he should book profits or continue holding the stock. Garden Reach, anything you want to suggest here, Jatin?
Yeah, see, in the case of Garden Reach, there could be some amount of pullback because it has witnessed a sharp rally from around 1700 to around 2600 in the last couple of weeks. So I think it's now a little overbought on the daily charts, and we are expecting some amount of consolidation before it, resumes its next leg of the up move. So, if someone is sitting in profits, then he should continue or he should consider booking some amount of profits. So, he can buy at lower levels when the stock corrects. So, consider booking profits in the case of GRS.
Okay, consider booking profits at this point of time. All right, just one last question before we let you go, Jatin. What are your top picks at this hour? Anything that you want to highlight, since you've given a range of stock advisors too?
Yeah, see, I'm expecting a move in the oil and gas space in particular. So GAIL is a long idea at current levels, stop loss of 185 and target of 197. Another recommendation is IGL. So IGL is a long idea, stop loss of 206 for a target of 225.
Okay, okay. IGL and GAIL, that is what we need to watch out for. But with that, we have to let you go, Jatin. Thank you so much for your time and answering our viewer queries so patiently.
Thank you so much.
All right, let's take a quick market check before we move on to our next guest of the show. If you look at the markets, we are off the day's highs, but still, in the positive lane. Our Sensex up about 22 points. Nifty is still holding. Nifty has slipped below that 25,000 mark. If you look at the advanced decline ratio, the declines have taken an upper hand at this point of time. Declines have taken an upper hand, and India Wix also, a little bit of a cool off that we saw. Now it is, at a steady rate at this point of time. Some of the sectoral indices, Nifty Metal Index, like I was talking about, building onto the gains of China cutting its prime lending rate. So that index is performing well with about 1% gains. Other than that, Nifty IT index after yesterday, given that the US markets performed well as well, so we can see that some of the gains have also trickled in for the Nifty IT index. Bank Nifty, however, is on a back foot, and Nifty Auto index also seeing a little bit of a profit taking with about 0.1% cut. On the other hand, if you look at the mid-cap and small-cap indices, that have slipped into the negative territory, and that is what is contributing to the loss of the overall markets as well. So the resilience that we saw for the markets was also given from the outperformance of mid-cap and small-cap indices, but now both of them have slipped into the negative territory. All right, on that note, let's quickly move on to our next guest of the show. We have Harish Krishnan, Co-CIO and Head Equity, Aditya Birla Sun Life AMC, joining us. Harish, good morning. So good to have you. Given the kind of run-up we have seen in the past couple of sessions, the street is once again concerned about the valuations turning expensive. Do you believe this is a buy or a hold market now?
This is a buy on dips kind of a market, primarily because we think that the earnings trajectory is going to be on the improving side. So Q3 and Q4 we saw significant kind of a downgrades, but the pace of downgrades have started reducing. Secondly, there were two key catalysts that happened in the month of February. First is in terms of the budget, where there was a saw for demand stimulation from a consumption point of view, which has been absent for almost 4 5 years. That was a big shift in departure. The second is, of course, what we've seen on the monetary side, where subsequent to the new governor coming in, we've seen a complete change in stance in terms of focus on growth compared to macro stability. Both of these typically tend to have a lag impact in terms of end demand, anywhere between say 6 to 12 months or so is where we would think that these two channels would start impacting overall demand, and therefore we think that there is an improving sense of earnings trajectory going ahead, especially as we look into FY27 and beyond. And therefore, while currently, yes, after a strong move in the last 2 months, there is going to be some range of consolidation that is but obvious. But we do think that this is a market where we would want to increasingly increase our exposure and buy on dips.
Okay, buy on dips market right now. But Harish, what about the India Inc.'s earnings? That turned out to be better than expected. But given the kind of investors, given the kind of returns investors want, what is the best strategy they should follow this year?
So I think while there's a lot going for India, both from a macro point of view, geopolitical standpoint of view, as well as potential shift in value chains and supply chains coming India's way. Possibly the one big negative is our own expectations of how all of these is going to go through, and which is built into the very high valuations that we currently are experiencing. Therefore, I think the solution for this is to have a long-term approach. Generally, we think that, or what we've seen in the last 20 to 25 years, is that earnings typically double anywhere between 5 to 6 years, and markets tend to follow that kind of a broad kind of a range. Now, of course, post-COVID, we've seen markets and earnings doubling every 3 years, and I guess that kind of has made it a habit formation that investors keep expecting that kind of an earnings growth. We do think that that is unlikely to be the case. We do think that earnings is more likely to revert back into doubling every 6 7 years, and therefore, as long as investors are cognizant of this, there is still money to be made for the patient investor. So the first point is to have a longer horizon than to expect faster returns. So play for the marathon rather than the 100-meter sprint. That is point number one. The second is, of course, be in an asset allocation space wherein we've got products where there are exposure to multiple asset classes, including that of fixed income, including that of REITs, InvITs. You've got commodities, you've got other asset classes, including precious metals. So this is a space wherein we encourage that asset allocation plays a far bigger role than necessarily believing that equities is possibly the only place to be in. So I would say that by choosing both of these metrics, one, have a longer term horizon, B, get into more asset allocation products. We think that overall investor expectations can be broadly met from a medium to long term perspective.
Okay, multi-asset allocation, that's what you're recommending. But Harish, what about the flexi cap funds? Because that's where the investors' interest has been but for the past 4 months. So how are you finding the response for the small and mid-cap funds, however? Would you expect the excitement to pertain there, given that kind of resilience we have seen in the small and mid-cap markets, that it started to pick up pace from now on?
So we think that broadly dislocations like what we've seen in the last 6 months, where there has been a big reset down, and when the markets again start forming a new base to move on forward, we think that sectors that led the rally the last 3 5 years are unlikely to be the ones that are going to lead in the next 3 5 years. So there are about 9 sectors which have underperformed in the last 3 5 years, and these include private sector banks, chemical chemicals, metals, cement, FMCG, oil and gas, textiles, alcohol beverages, etc. Now, within these, when we look at what is the composition of various indices, sectoral indices, we see that sectors like banking, metals, oil and gas, etc., are more geared towards large caps performing over there, whereas sectors like say chemicals, cement, are more and textiles are more geared towards mid and small cap. So, given this dynamic, that there are going to be newer sectors potentially that are going to lead over the course of the next 3 5 years, and where there is enough opportunity, be it in the large cap or in the mid and small cap, we think that potentially a flexi cap orientation is better, rather than entirely believing that mid and small caps alone can provide that significant wealth acceleration. So I would think that instead of necessarily focusing only on the market cap kind of a break, it would be better to look at portfolios which have a greater weightages to these 9 10 sectors, and then take a far more meaningful informed call, rather than believing that all small caps will rise up just because they had done so in the preceding 3 years.
Okay, okay, okay. Harish, you did mention a lot of sectoral leaders that could lead the markets ahead. But what about the narrative stocks? Because in majority of the bull markets, narrative stocks also gain traction. So what is your advice for investors this time to approach this space, be it the likes of PSUs, capital goods, or even the railways theme?
Sectors where there is a large buyer in the form of say government, I think one needs to be cognizant of the fact that while near-term earnings and near-term stories and narratives, as you put it, is still continues to be very strong, but the value of a company, 70 80 or maybe even 90% of the value that one pays today is in the terminal value of that company, which is going to be beyond the next 2 3 4 years. And given that a lot of these sectors, including PSUs, including railways, defense, the idea is that the margin profile, the ordering environment, all can very significantly change 3 4 years down the line, and therefore to pay very high entry multiples is not something that we would think provides a reasonable range of cushion or margin of safety at this point of time. On the other hand, if we look at, say, sectors which have not participated, like, say, the consumption-oriented sectors, which have been, kind of a laggard in the last 3 5 years, where valuations have kind of corrected, these companies have now started focusing on volume growth rather than just necessarily focusing on margins. We think that there is better margin of safety over there, because investing is not just about identifying the next 8 quarters earnings. It is about identifying where the terminal value eventually will reside, and that is where we think that those kind of sectors we find greater comfort, rather than necessarily playing on to the narrative pack.
Okay, okay, okay. You did mention about the consumption theme as well. I want to understand for the rural consumption theme, be it your likes of fertilizers, two-wheelers, agrochemicals, because the IMD has also forecasted a good monsoon arrival, like from May 27 onwards itself. So, what is your overall view on this entire space?
I think both urban and rural consumption, to my mind, over the course of the next 3 5 years, can be, can see an improving earnings trend. Like I said, the issue is not so much of the end demand that had taken a big knock. The reality is that many of these sectors have seen a significant margin expansion. For example, the largest FMCG company saw almost 1,000 basis point margin expansion over the course of the last 10 years. And when you have such a relentless focus on margins, there is definitely some scope for competition to come through. You're allowing for competition, including direct to consumer brands, etc., to come through. And which is what we've kind of seen impacting overall revenue profiles of many of these companies. The heartening thing to note is that many of these companies are now therefore shifting gears to downshift their margins even as they are trying to accelerate their volume growth, which to our mind is the right strategy from a long-term business point of view. And therefore, we think that, over the course of time, many of these sectoral leaders that are taking these hard decisions now will see the benefits of this decision making, and that applies both to rural consumer oriented franchises as well as urban focused franchises. So we're not really making a distinction between urban and rural. Yes, at the end of the day, a better monsoon, a higher farm income, etc., does increase the propensity to spend, and which is what, for example, the Nielsen data does indicate of FMCG spending as far as the rural-urban mix is concerned. But we are positive on both sects of the segment at this point of time.
Okay, okay. Harish, what about the food delivery businesses, be the likes of Swiggy or Zomato? How do they look like going ahead? Because everyone was concerned about, that the quick commerce has, the expansion of the quick commerce has led to a burning out of cash for both of these companies, and the fundamentals could be in check going ahead. What is your outlook for these, for these food delivery businesses?
So I think there has been a hyper competition among the three or maybe 4, 5 newer players that are coming in, and definitely among the top three players as far as the quick commerce plays are concerned. And that really is a land grab focus, which is let's get the users, let's get the dark stores as soon as possible, and therefore we will try and change habits over a period of time. The inherent unit economics of quick commerce aren't necessarily bad because they don't consume a lot of capital, is our understanding. But given the fact that there has been a significant amount of increase in pace of this land grab, for the moment, we are definitely seeing a significant amount of cash burn that is coming through. We do expect that this phase of elevated competition will kind of stabilize as all the three larger companies get into the listed domain in the public markets, which will bring in discipline as far as these unit economics are concerned. And therefore, we think in the course of the next 6-12 months, as all the three players get listed, we'll see a greater amount of discipline kind of coming through. For the moment, yes, there seems to be an elevated hyper competition in the space. But I guess the bigger imponderable is not necessarily about what the cash burn and the hyper competitive phase today is. But the bigger imponderable is the market big enough beyond the top 25, top 50 cities where the population is very dense and which lends itself to significant amount of local, hyper local deliveries. I guess that is really where we'll get a sense as they move into, tier 2, tier 3 towns and exhibit the same amount of growth, because we've seen these kind of narratives spin out of control. For example, when the e-commerce wave came through, in the 2010 to 2020 era, wherein it appeared that companies like Flipkart, Amazon could do no wrong, and then over a period of time, their growth rates have kind of come through as there was a saturation in the target addressable market. So I would really want to watch out for how these hyperlocal deliveries scale beyond the top 20-25 cities and exhibit data in terms of how they're continuing to see growth beyond these 25 cities or so. And that really is to my mind what the longer term economics is going to drive through.
Okay, Harish. Harish, just one last question before we let you go. You did start your Choti SIPs in the month of March. Any assessment so far?
So I think it's been an encouraging kind of a response. These are campaigns that are meant to sachetize, savings behavior, and the idea is that there is a certain set of population which possibly finds disciplined saving, especially of a very large amount, quite difficult to happen. And therefore, campaigns like these really help in terms of accessing the next wave of consumers, who can start out small and who see the benefits of investing in a very disciplined manner over time, and then graduate into more evolved customers of the mutual fund franchise. So this is more for us an ability to recruit customers who today may be at the fringes of saving habits, and over a period of time, by these products, it inculcates savings and deposit behavior, which can then channelize into far more productive assets for the overall economy.
Okay. Harish, a bit like how has the response been so far for the Choti SIPs? Any traction that you're seeing, good traction for the micro SIPs?
Sure. On the investment side, we really wouldn't know, what the micro numbers are.
Okay.
But I would imagine that this is still very early to really call out anything specific.
Okay. All right. With that, we have to let you go, Harish. But thank you so much for your time, and we hope that we connect with you soon. All right, let's take a quick check of the markets at this point of time. Well, Sensex is down about 148, 150 points for the Sensex, and Nifty has slipped below that 24,900 mark as well. So 24,900 mark, 25,000 to 24,900. That also we have slipped right now. If you look at the India Wix, that has cooled off. That is like 0.7% downtick. Nifty Metal and IT indices still continue to do well, but they have trimmed their earlier gains. Majority of the sectors have slipped into the negative territory, and even the broader markets are not participating today. They have also slipped into the negative territory. But with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for closing, and we'll be discussing about how the market is developed, what the stocks were in focus. Until then, signing off.